Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, July 27, 2015. So we're looking at a daily chart of the SPY, and we had another down day today, obviously. So obviously our pivot top was right. Obviously this market complexion has changed, and I mentioned last Friday that we're going to be due for a bounce. Now, we didn't get the bounce today, but I would suggest either tomorrow or by the latest Wednesday we'll get the bounce. And here's the reason why. I'm actually leaning towards tomorrow because think about it like a rubber band. If you stretch a rubber band, okay, and you keep stretching it and you keep stretching it, one of two things happens. Either you let go and it snaps back, or the more you stretch it, it breaks. And what I mean by that is we're very oversold in this market right now on a short-term basis, meaning over the last week or so. So what I'm suggesting is if we continue lower, okay, we run the risk of doing this, okay, all the way down here to like 202 in that neighborhood, which ironically enough, or 201, ironically enough, would have been the target of that last head and shoulders pattern that we were talking about for a long time. So with that being said, I'm suggesting that we're going to see a bounce in short order. Now, where is that bounce going to take us? And that's the $100,000 question. I'm not anticipating a very, very large bounce. Sure, we could have a nice 20, 25 point up day in the SPY. I'm sorry, in the S&P 500, $2.5 in the SPY over a day or so. Easy, no problem. But am I thinking we're going to get back to 212, 213? No, I don't think so. I think what's going to happen is, and our best opportunity for the next shorting opportunity is if we have, like 2 or 3 days like this, okay, and then we just go back down. And what I'm thinking is going to happen, and I'm just going to draw it one more time for you. What I'm thinking is going to happen is we're going to do one of these, we're going to bounce, we're going to stall out, and then we're going to roll over again. And that's basically the same thing I told you on Friday, but now we're getting to the point where we came into the 200 period moving average again. Now look what happened. We hit the 200 period moving average 1, 2, 3, went through it 4, 5, 6 times, okay, over the last, let's say, when was this? This was at the end of June. So basically, within the last 30 days, okay, we've hit this 200 period moving average many times. And yes, it held today, but the more times you hit it, the less likely it is to continue to hold. Now, this green line I put on was a calculation I had. It was at 206. I think last week I might have had it slightly higher, but I recalculated it today, and I had it at 206, and we didn't hit it, but we hit the 200 period moving average, and I think it may hold one more time. But rest assured, if we get the bounce I'm anticipating up like this, okay, and I'm going to do this one more time. If we do this, okay, from the 200 period moving average, okay, and then we come back down, no chance it holds again. That's the end. Okay, then we're going to do one of these jobs. And we'll talk about, how far and how fast and all that stuff later. But right now, the market is going to be prone to a bounce. That's the way we're going to play it. It's more likely than not tomorrow, Wednesday, maybe Thursday, and let me just see, what day is Thursday? Thursday's the 30th. Now this is interesting because I do have a cycle turn scheduled for Thursday. So here's the way this looks. I don't want to confuse the issue, but you need to know what I know, right? I'm just trying to transfer the information that I have to you. So here it is. The cycle turn day on Thursday should turn the market. Now, if we continue down into Thursday, then Thursday would be your not first, but it would be certainly a very good opportunity for a bounce, but we could be a lot lower by Thursday if we continue down. If we go up tomorrow and Wednesday, and maybe even Thursday, then I would suggest either Thursday or Friday would turn back down. Remember, cycle turn day, the market could go rally up or down into the turn. It doesn't have to turn before that day or in the morning of that day. It's either or. It's plus or minus 1 day really. So the market could rally up into Thursday and then we can turn back down, whether it's Friday or Monday. Or if we go down from here, which I don't think is likely, then we would turn up on or after Thursday. So that's everything I know about the market, but pretty much everything is playing out as planned. It's very hard to tell exactly when the market's going to bounce. I thought we had an opportunity that we hit this 207.57 last week. Remember, we came up short by 3 cents, but today we went down again. But you know what? It wasn't a massacre today, right? The Dow was down 127. The volume on the SPY was 126 million shares. Now, that's above average, but it's not, by no way is it a capitulation day. It's not a throw-up day. It's not an exhaustion day, nothing like that. So the volume, while it was larger than average, it certainly is telling us that there's buyers out there, and everybody wasn't just dumping stocks into the market, okay? If that was the case, we would have seen a day like this here where we saw 200 million shares, something like that, 160 or 70 million shares, 175 million shares. We didn't see that, so that's another indicator to me that tells me we're probably more likely to have a bounce over the next few days than not. And that's my stance right now. Does it have to happen? No, it doesn't. And that's why we have short positions, and that's why we're very aware of what's happening, right? We say maybe there will be a bounce, but at the same time, we certainly understand our next target is 206, and if we close hourly and then daily below 206, and then it's 202. Okay, in fact, I'm going to put that in right here, all right, because that's going to be the next area of defense. Is going to be about 202. And I'll refine that later, but as you can see, it's a gap fill area. It's also an area that we were looking at before from if this head and shoulders pattern that we had from a few weeks ago was to complete. Remember, we had the left shoulder, we had the head, we had the right shoulder, and then we went down, we broke it, but we recaptured it. Had that not broken and completed, it would have been down here, okay? And we all remember that. So that's the story in the market. If we want to take a look at the IWM was weaker than the S&P today. It was weaker than the Spider. It was down 0.75%, while the Spider was down less than 0.5%. But again, we're into the 200 period moving average. Now, we haven't hit the 200 period moving average in the IWM, Small Business Across America, since February. So that's meaningful. So I would expect this to be an area of support. So in my work, I'm having signals that tell me that we're probably into some support, at least for the short term. And when I say short term, I mean very short term, only a few days. What we're going to do is we're going to take an opportunity for any kind of bounce in the market to reshort and load up on short positions for lower prices, okay? So that about covers the market. Let's go to gold. Here we go. Now here's a daily chart of gold, but I want to bring up the hourly chart because I want to show you something very interesting. If you remember, on Friday, I said that we should get a rally in gold, and it should take us up to about the 1105 area, okay? Go back and check the video. We went as high today as 1104.40, okay? That's, in my mind, that's a hit. That's 60 cents away from a direct hit on an $1,100 equity or $1,100 market. That's a direct hit as far as I'm concerned. So what happened was we failed at that level. Instead of closing over that level, that would have certainly given us the idea higher prices were coming. And remember, as long as we can get over 1105, we're going to start looking for that 1130 target over time. First, we got to get through the 200 and all that stuff. But it didn't happen. It failed. So right now, we're in a holding pattern, and what we're going to say is I've got to let the market show us more. It's not a bearish sign. It's not a bullish sign. It's just a sign that finally we had a completion of the target down at 1175, and now we're trying to work our way higher. But what happens if we don't recapture 1105 and the market remains below 1105? I'll tell you what happens. The next area, and I've got my notes here, bear with me. The next area is going to be, and I'm going to put it on the chart, is 1165. And then that's an area, I'll go back to the daily chart, see if it comes up. Okay, it doesn't come up. Let's see if it comes up on the weekly chart. Nope. Okay, see, it's too far down. So 1165, and then I think last week at one point I might have given you 1148. I'm sorry, 1065. Did I put that in right or wrong? Let me just double check. 1065. Okay, it's still not going to show up, but I don't remember what I... Yeah, okay. I did put it in 1165. All right, forgive me. I'm sorry. I got confused there. My fault. Okay, but now we've got it in right, and it's way down there. So what we're looking for in simple terms is if the market can't recapture 1105, then we're going to go reverse back down, and we're probably not going to hold 1075, and we're probably going to have the next stop at 1065, and then 1048 or 46, which I gave you last week at some point. So those are numbers that I've calculated. Let's let the market show us its hand. Let's let the market tell us what the likely scenario is. And the other reason why I'm not convinced one way or the other that we're not going to go up or down is because all we did when we went from down here up to 1104.40 and down, this area is only a 50% retracement of that rally. So that's normal market behavior, and it tells me that the market may have just retraced a normal number and we may go higher. So I'm going to let the market show us, and right now we're not going to buy the market. Nobody buy the market, the gold market, up until we can prove, or it can prove to us, that it's ready to get over 1105 on a closing basis, first hourly and then daily. And then we'll have plenty of time to trade it up to 1130. Okay, so that's gold. Let's move on to oil. And oil, if you remember, we were looking for 48. We got 48, satisfied. The next level was 46. And here it comes. Now we're below 47. We're at 46.99. 46 is in the cards. Below 46, I can't tell you. I don't have an indication that we're going to go lower than 46 at this point. But if you could remember from way back up here, I was telling you the mid-40s were coming. And here we are. We're at 47. We have at least another downside to go on downside of $1 to go. And we'll just play it by ear. Let's see how the market reacts off 46. If you want to trade it down to 46, you can. Just put a stop, a tight stop. Don't let the market kill you on the upside. But I think 46 is probably in the cards, or it should be in the cards. And that's this week. That's not like sometime in the future. That's like within the next couple of days. So, or sooner. Could be tonight, could be tomorrow. So once 46 happens, I have to see how the market treats 46, reacts off 46, and then we'll see if that was or will be the bottom. And if it is, then we'll know what to do. And if it's not, I'll have another number for you on the downside. But right now, I don't calculate any number below 46 that makes any sense to me. So that's the lowest downside target I have. But all in all, just like the other markets, everything is playing out as planned. Oil's going down just like we thought it would. Okay, let's go over to the bond market. We'll take a look at the TLT and another update in the TLT. So the bond market definitely rallied a little bit farther than I thought it would, but we're getting top heavy now, and this market is extended just like the stock market's extended on the bottom side or on the downside. The bond market is extended on the upside. we're going to see a pullback in the bond market. It's just a matter of from what number and when, but I would suggest it's coming, and it's probably coming sooner than later. But once we see the signal, which will either be some kind of a topping signal. It'll be a doji, it'll be a high volume reversal day, it'll be an engulfing candle, it'll be exhaustion of some sort. But when we do see that, I'll have some downside targets for you, and we'll just go with that accordingly. But right now, we're extended on the upside. I'm looking for a signal that the bond market is turning, and that's it. I just don't see much higher prices. But what happens if we do see higher prices? Where would that take us? Well, right now, the next area of resistance would be right in this area here, which, well, that's a sloppy line. Let me do it this way. It would be right here at about 123.5, and that's only $1.50 away in the TLT. While it is a nice move in the TLT, I just don't think we're going to get there, but anything's possible. I don't have an indication for higher prices in bonds. I do have an indication that bonds should be topping out right about now. So when I say that, I mean we should be coming into a daily cycle top, and it's actually late. So we're actually a little late in what should be a bond market turn. So that's why I'm a little wishy-washy. Sometimes when we're late in a market turn, we tend to go through the turn and have higher prices. And that's why I put this 123.5 in there for you, because we could get there. I just don't think we will. I'm suspect on it. But either way, there's no trade right now in the bond market until it shows us it's ready to turn. And when it does, I'll have some downside targets for you. Okay. The dollar. The dollar was lower today. We knew it was going lower. I knew we had to see it go into and through the 20-period moving average. We did that. I would like to see it come down to this 96.15. That's a target that I'd like to see satisfied. Right now, it's an unresolved position. It coincides with the 50-period moving average, which is this blue line here, and I would like to see that happen. Maybe it happens overnight. Maybe it happens tomorrow. But once that happens, I think that the dollar should reverse higher and give us a pretty good trade on the higher side, which would also mean the euro is due for a reverse, and the euro, we should see lower prices, and I'm looking for both those things to happen this week. I would like to see this satisfied on the downside. I hate when those targets don't get satisfied. Remember gold? I was just never convinced that we saw the low in gold until we saw that 1075. Same thing goes for the dollar. I'm just not convinced that the dollar has made an interim or short-term low until we see that 96.15. I really would like to see that hit. That would be that would make me sleep at night. And you know what happens? I'm going to wake up in the middle of the night checking the dollar to see if it hit our 96.15. Okay, so natural gas. Let's move over to natural gas. See what we have there. We had a down day in natural gas right into this target here, into this this pivot low, and this is now the September contract in natural gas, and we had a reversal off that, and we should see higher prices in natural gas. I'm looking for an up move in natural gas. That's not the tool I want. Sorry, folks. I want this one where I can draw an arrow. I'm looking for higher prices in natural gas. I don't think we're going to go lower than this. I think this satisfied the downside target. And this, remember, this is still, let me get rid of that. This is still a, what? Wrong. I'm sorry, folks. Forgive me. This is still a bullish pattern. So as long as we start up, we should see higher prices in natural gas as long as we don't close below this line. If we close below this line, we're going to run into this scenario again. And this, while this was a fake out, it certainly takes my indication for bullish behavior off the table. What it does is it reduces the probabilities. So I don't like when we reduce the probabilities. Right now, my probabilities are very high. We're going to see higher prices in natural gas. If we close below this line, that gets reduced. It doesn't mean we can't see it. It just means I'm not comfortable taking a trade or telling you that we're going to see higher prices because it messes up my messes up my charts is what it does. So right now we're okay, and we should see higher prices in natural gas. And I don't have a price target for you just yet. Or do I? Did I do a calculation? No, I don't have it. I'm going to work on that, and I'll probably have it for you tomorrow, and we'll talk about it then. But we should see higher prices, and if you want to be long natural gas, you can be long against a low of 274. $2.74 would be a good stop out on the downside on a daily close below 274. Even hourly closes below 274 would tell you that the probabilities have been reduced that we're going to see higher prices, but that's probably a good stop. So anything against 274, we should see higher prices in natural gas. Okay, we'll talk about one more thing because I know some of you took some profit, but I know some of you didn't in the BIS. And the BIS was up nicely today, and then it kind of backed off a little bit. And the reason is because if we're going to see a bounce in the market, we're going to see the BIS pull back a little bit. But again, I'm not expecting an all-out, bullish rally for the next 3 weeks coming. That's not what we're saying in the market, I mean. So a couple 3-day rally in the market to work off some of this oversold condition is probably going to bring the BIS down a little bit. And I'm holding it because I'm looking for higher prices in the BIS. I'm looking to take additional short positions on a retracement rally in the market, and that's why I'm not worried about it. But I understand if you wanted to take some off. By the way, everybody should have at minimum of a stop in the money in BIS right now. Don't ever let a trade like this go against you. When you have a trade that worked out like this in a couple of days, you want to make sure that at worst case, you have a profitable scenario. I know some of you took half off and put a break even or in the money stop on the other half. At least have a in the money stop on this position just in case, right? Everybody's wrong. I could be wrong. I've been wrong before. But so we don't want to let a good trade go against us. And that's about it for tonight. So I'm going to leave it there. Anybody has any questions, shoot me an email. You're more than welcome. This is David Frost. Thanks for taking the time for another episode of Common Sense Market Analysis. Have a great evening, folks.